UK Export Finance is a guarantee department. It's an export credit agency. Every country has one, and they are designed to promote exports. The UK one is one of the oldest and largest in the world, and we report into the Treasury. There's a little bit here about how UK Export Finance fits into the international trade and export finance business. This is you, the exporter. This is your bank. And what you see around the diagram here are the various products that we offer. The short-term products are to assist you, particularly small businesses, with working capital support, bonding support where you have to provide bonding to a buyer, and to ensure your export contract in the event that you don't get paid. And we all know that around the world there's some pretty tricky markets that you have to navigate, and that's particularly challenging for a small business that may have one large single contract at stake, or where that business is starting to export for the very first time. On the right-hand side are the medium-term financing products which we can use to offer your buyer and your borrower extended credit facilities. Once you start supplying goods and services above a certain value or of a certain nature, buyers and borrowers expect to receive credit terms to help them pay. And basically, the heart of everything is that, at the heart of everything is the guarantee of the UK government to repay the lender who has provided those facilities to you. So who can we support? We can support any UK registered company. We need an underlying commercial contract between you as a UK domicile business and an overseas international domicile business. There is no limit on the size. We can go from very small to very large. Big point here is that at least 20% of your export contract must contain goods and services from the UK. But interestingly enough, up to 80% doesn't need to be from the UK. So that allows those of you who trade or bring goods, semi-finished goods in and finish those goods, or do add value added to those goods, to then re-export them. So that's a more detailed summary there. Underlying commercial contract, that's key. A lot of people don't have that in place. So what we're saying is make sure you have a contract. Why? Because it is the payment terms of that commercial contract that we will work with you to help make sure that you have the cash flow and the protection. So your buyer may say, well, I'll pay you 60 days or 90 days. And that's when you're using up cash in your business, but he's not going to be paying you for another 2 months or 3 months. We also, as I say, take a risk on you with our export credit insurance scheme. So we will insure your contract pretty well regardless of who else is involved. We take the risk on you. I am an export finance advisor. There are 24 of us in the country, and we are regionally focused. So I look after London East. I have another colleague who was here yesterday who looks after London West. But all around the country, depending where you are based, you have a dedicated export financer like me, whose job is to sit with you and help you with your bank to put together the structure to support your financing needs. And we access yourselves, UKTI, which is the government department promoting all aspects of international trade and investment, Main Street commercial banks, but also private market insurers. We have a database of what you might call non-high street bank solutions. So trade insurance, other types of insurance, invoice purchasing, supply financing, those sorts of things. I think this diagram just elaborates the funding providers are key. I think we all appreciate that today a lot of the high street banks are not working as properly as they should be. They're not doing the lending they should be and the support. So what we're seeing is an alternative industry in providing alternative finance. And so we have a very good database of those types of providers, from crowdfunding right the way through to people who will help you actually deploy your pension into your business. So those are the roles that export financiers play. Here's a little bit of a summary of the products we offer. I referred to earlier. These are arrangements with your bank. Okay, so we are providing guarantees to your bank in order for them to provide those facilities to your business. I think the big one is the working capital scheme. So that if you have a contract, let's say for $1 million, and you need $500,000 of working capital, we will guarantee up to 80% of that facility. So $400,000 of the working capital would come under a guarantee from us. And that helps the bank overcome the risk of you and your commercial contract. The insurance policies are a relationship we have directly with you, not your bank. This is where we insure your bond. So if you have to provide a bond with your contract and it gets unfairly called, or there are jurisdictional issues in the market you're working in, we will insure that for you. We'll also insure your commercial contract against non-payment. And that can include third-party failure, someone not related to you or your buyer who fails to perform, a subcontractor maybe, or indeed government policy in the country where you're looking to export, or in a case like a market like Iran, where you have the risk of future sanctions. That would be protected. I've talked a little bit about the medium-term financing that you can offer your buyers and borrowers. Typically, if you're looking at bigger contracts, as I said, you would be looking to offer your buyer-borrower credit terms. So here we have a supplier credit structure, which is for simple underlying equipment supply, say lorries or trucks or medical equipment, or buyer credits, which are designed to support more complex projects where you're involved with a commissioning role and stage payments. Typically a buyer credit has a loan agreement involved in it. And here we have the direct lending scheme, which is being used in a lot of markets at the moment where there is a shortage of foreign currency, particularly in Africa, where we, UK Export Finance, will directly provide hard currency to that market. So here's a summary of the products I've just referred to. The ones in green are the short-term trade finance products that most SMEs would use, day-to-day business. The ones in yellow are the longer, medium-term products as you develop more complex export needs. I've put here an example of the kind of support that we can provide and the kind of needs that an exporter can face. You've got a tender bond, a performance bond, an advance payment bond, and a warranty of retention. Bonding is notorious for tying up cash in a small SME, because if you have to provide these bonds, most banks require you to back them with cash. So the very cash the buyer gives you gets used to act as security for the bank. You can see that the bank could have up to 900,000, 800,000 of support, depending on how these bonds move. And that cash then gets freed up for your business to use on the underlying export contract. Same with the working capital here and the insurance contract. So you can see UK Export Finance would be intimately involved in all of the aspects of the underlying contract in your business. We can envelop your business in the support that it needs. I think it's worth mentioning that our costs are very competitive and are based about integrating our costs within the overall banking costs you have. They don't have additional costs for you as an exporter. But the first thing is key is to work with your bank. Yeah, bring your bank along with all the discussions you have, including your underlying commercial contract, but also the needs that your business has. And that's the key message. What are your financing needs as a business? What are your cash flow needs? What are the payment terms that you have? And the insurance side, we can broker insurance externally, or we can provide it directly to you. We are, in all cases, designed to top up where the commercial market leaves off. So if the banks aren't providing enough support, or the insurance market isn't providing enough support, we will step in. A good example is Brazil at the moment, quite a challenging market to get export insurance and to get some trade facilities. We're doing a lot of business in Brazil. We are very comfortable with the risk of Rio 16, and that, as you probably may know, Olympic Games are, the credit risk on an Olympic game is typically with the city that hosts it, and not much more. There's some examples here, case studies, which have shown how small businesses, in this case an educational business, has been able to develop and grow its business based upon bond support and working capital. In Eritrea, medical goods and services to Greece. We're on cover for Greece, although it's a challenging market, we will step in there. An export credit insurance here for construction equipment in Africa. It's a classic insurance product here because clearly if you're supplying equipment, there are so many stages at which you need to be sure you're going to get paid, from subcontracting the supply of that equipment to shipping it to delivery at the port and for onward delivery to the client. But JCB is a very big user of UK Export Finance products. They have a strategy, a policy to use us on a market-by-market basis. This is a storage business in Ethiopia. It's a very, very good example of a business that literally was only able to expand through using UK Export Finance. Basically, we have a website, UK Export Finance, which lists our products, the procedures and the process that is required, and I would encourage you, if you have any queries, to look at our website. On that website, additionally, is the national network of export finance advisors, so you will refer you to where your export financer is, which is the region where your business is located. This is our new head of the project, UK Export Finance, Louis Taylor, ex-Standard Chartered Bank. So hopefully we'll bring in yet more commercial banking experience. And that is my presentation over. I wanted to get through to answer any questions that any of you may have on the UK Export Finance as a department, or the products, or the services offered. Sorry, madam, can you speak up now?
As a company, if you want to export, if you have a contract to deliver training abroad.
Training abroad, yeah.
And you need funding to be able to start it.
Yes.
They don't want to pay you up front.
Yes.
And you don't have the funding to actually
Yes.
go and get going. What help?
What help? Okay. The lady asked the question, what help would there be for an education and training business that's starting up, seeking to effectively export through providing a training, educational services contract, but can't get upfront funding from the buyer-borrower? First of all, we deal with a lot of SMEs that are in a startup or quasi-startup phase, and a lot of them hinge on one or two single export contracts. And that in theory is doable, but it doesn't replace the need for you to have a proper commercial contract firstly in place, which at least does recognise that you're going to have some outlays involved. They can bond those upfront payments to you, protect them, and then we can provide the guarantees to your bank to support that. But it sounds like at the moment, if, as a startup, that you would need sort of some further development to give your business a track record in order to make sure these guys would support it. Any other questions? Well, the lady asked about having a track record here. The key for us is that there must be a UK registered business. And when we look at providing those support and those services, we look at you, your track record and your resources. We then look at the underlying contract to make sure that's in line with what you typically provide. And then we look at the buyer at the other end. So there's three elements to that. But if you've got that track record and your business is established, then it's a question of meeting with your bank, sitting with the bank and establishing what your finance needs are. If you do have a commercial contract and they say, right, well, you must provide the first X days of training and we will pay you in arrears, then it's clearly part of your cash flow need. On the strength of the underlying contract, we would be happy to step in with your bank and provide a guarantee for working capital that you might need for that contract. So you might say, well, I need 30 or 60 days of salary costs to pay for that, and I want to get the capital. I see a lot of businesses that underestimate their working capital need and underestimate the product that's on offer here to provide that. I think that's a very key point. And once you've got that in place, then we can also insure that contract so that if after 60 days or so you didn't get paid, the bank would see that we were insuring that contract and be more comfortable in supporting you anyway, because they would know that if you're not going to be paid under that contract, that we would be stepping in. Any more questions at the back? All done. Great. Well, thank you very much. Welcome to UK Finance.